Good day, you're watching Businessworld Live. I'm Danie, Laurel. Here are today's top stories. The National Economic and Development Authority says revenge spending helped boost economic growth in the third quarter. But the agency warns that elevated inflation could still weigh on the economy. Net foreign direct investment inflows dropped in August on the back of higher interest rates and a looming global economic slowdown. Spanish multinational Elecnor is looking into solar and offshore development projects here in the Philippines. And can FTX get out of an $8 billion hole after rival Binance backed out of rescuing the crypto exchange? Let's begin our broadcast with Socio-Economic Planning Secretary Arsenio Balisacan attributing the better-than-expected GDP growth in the third quarter to revenge spending. However, he warns that faster inflation could still dampen economic growth. Shaila Francisco with this report.
The economy managed to grow at a faster pace than expected in the third quarter. That's despite record-high inflation, a weak peso, and expensive borrowing costs. The Philippine Statistics Authority reports that gross domestic product grew by 7.6% in the third quarter on the back of higher household spending. Even the National Economic and Development Authority, or NEDA, was surprised by the GDP growth. NEDA says demand may have increased due to revenge spending with the further reopening of the economy.
Having been deprived of mobility for 2 years, you just want to go out and see the world again. I think that mobility was a big part of the story there. The high prices might not have completely dampened the desire to go out and spend. Perhaps because on the employment side, they see opportunities for income generation.
Unfortunately, this growth has yet to trickle down to ordinary Filipinos.
Medyo hirap pa, hindi pa rin ganun bumabangon. Tsaka halos parang walang nangyayari. Talagang tiyaga, dahil wala. Meron kang binabayaran kada buwan.
Hirap pa rin kumita eh. Sabi natin na sinasabi ng maganda, pero hindi na nararamdaman eh. Naku ma'am, napakamahal po ng bilihin ngayon. Sobra. Hindi na kinakaya ng budget.
NEDA said that inflation could still dampen growth. That's why they are focusing on providing targeted assistance like cash transfers.
If we can focus on improving that, I think we can do well. Then that's why we are ramping up the digitalization, the national ID, because that will help us ensure that we reduce and we can improve our ability to deliver the ayuda to the most deserving, most vulnerable.
Despite the threat of high inflation, the government is optimistic that the economy can hit the 6.5% to 7.5% growth target set for this year. Shaila Francisco, we are One News.
Meanwhile, net inflows of foreign direct investments, or FDIs, declined in August on a year-on-year basis. Data from the Bangko Sentral show that FDI net inflows fell by 19% to $797 million in August. That's from $987 million in the same month of last year. But on a month-on-month basis, FDI net inflows were 73% higher than the $460 million in July. August saw the biggest monthly FDI inflow since the $989 million in April. The Bangko Sentral attributes the FDI slowdown to the weakening global growth prospects, particularly with the moderating demand and policy tightening in major economies. BSP data showed all major FDI components posted lower net inflows, particularly non-residents' net investments in debt instruments of their local affiliates. The 7.6% year-on-year third-quarter GDP growth exceeded most estimates by a mile, now attributed to revenge spending. The question is this sustainable with such a high inflationary environment? Here to weigh in, we have with us Emmanuel Leyco, President of the Pamantasan ng Lungsod ng Maynila. Good morning, Prof. Prof, may you come off of mute, please?
Again, thank you. Good morning and thanks for having me here.
Sir, kick off with, of course, I'm sure like most people, you may have been surprised with the GDP print. How does this now change your outlook? What does it tell you about the real economy?
Well, actually, we have to understand first, where is this GDP growth coming from? The employment is not really improving. We have more underemployment coming. And also, when we look at the GDP components, it's mostly driven by consumption. So the logical question is, while the employment numbers are not exactly improving, where is consumption coming from? And I think the remittances coming from our OFW brothers and sisters from abroad, it's really saving the day for the Philippine economy. Just like what we have seen in the past, it's the OFW money that's driving the economy. So I don't think we can rest easy and say, revenge spending is now taking over, and people are going to spend because they have a lot of money. No, they don't.
Okay, but sir, how long will this revenge spending is going to persist before it starts getting eaten up by inflation? Is this a one-off third quarter print for whatever reason because we saw the highest inflation in something like 14 years, diba? Or is this a trend that might be continuing if we still have good remittances, if people still have savings that, and as you mentioned, excited pa rin sila to go out from COVID? How much longer is this going to be?
Well, I hope it lasts longer, but I think from the looks of it, this is not exactly revenge spending. This is actually people are spending more for their essentials because OFW money is coming in. Are we going to expect for this to continue to be sustainable? I'm not sure it will.
Okay. Sir, what about the statements of President Bongbong Marcos that this print is due to positive policy decisions that have been made in the first few months of his administration? Can you comment on certain things that may have driven this type of growth?
I beg to disagree with the president. I think what we are seeing is the traditional growth being driven by consumption and being sustained by OFW money. However, if we look at OFW money, it's already bordering $3 billion. With the threat of global inflation, I don't think that will be sustainable.
Sir, are you seeing other signs that there is real growth happening here, capital formation? Are you happy with the prints apart from the consumption spending part? Are you happy with, I don't know, the export prints, the industry print, the agriculture print? Is this showing real fundamental growth?
Yes, I think to some extent capital formation is already coming in. But mostly on construction. But I think the construction spending is coming from pre-selling that has happened in the past. And now property developers, construction is just keeping up with what was promised in the past. This was deferred spending on construction. Now it's coming in. So are we going to see more of construction in the future? I think investors are also holding back because there is the threat of increasing interest rate. Mortgage, real estate relies heavily on borrowing. So if interest continues to go up, people will hold back.
Sir, can you say that inflation or high interest rate environment is possibly less of a concern now that we can, so to speak, outpace this with our growth pala?
I am not exactly sure that we should continue the trend that the BSP has taken in the past where inflation is being controlled through monetary and financial interventions. I don't think that is feasible. In fact, I shouldn't be concerned. If interest rates continue to increase, the government itself will be facing higher interest expense because they are promising investors, buyers of treasury bills, and loans of the government with higher interest. In the future, in the near future, the government will also be confronting higher interest rate expense on their part.
Sir, but now what else can be done, and are you seeing inflation peaking before the end of the year as some economists expect? Given that, even the actions in the U.S. Fed and given the inflationary print that was lower than expected in the U.S. Fed the same day as our GDP came out, and like you mentioned, perhaps looking at other tools apart from interest rate to battle the inflation expectations.
I was hoping that fiscal intervention can come in. However, the national budget is about to be approved, it's about to be passed, and I did not see any direct, deliberate inflationary or inflation intervention in our budget. I don't think that is the case.
Okay.
And the temporary lull in interest rates in the U.S., I think, is due to the recently concluded elections. They did not want to face the electorate with a higher interest rate, but I think that will come.
Okay, and finally, sir, big question here, because we did roll that VO of people on the street saying, even if the growth is this high, hindi namin nararamdaman. Do you feel, is this growth spilling into real life? I mean, of course, it's been a difficult COVID year. We're still recovering. But at least compared naman to last year, compared to 2020, has there been a feeling that there is lower poverty incidence, better quality of jobs, better quality of life? Where is this print, seeping through our daily lives?
I think when the social weather station survey comes in terms of reporting hunger, I think that will be indicative of how the recent GDP growth affected them. But I think we can expect that not many will feel the GDP growing, because if you're a fixed wage earner, you will not feel that your income grew. In fact, what you will feel is the continuing pressure on higher prices in the market. Your purchasing power has weakened, and therefore, I think what we hear from people on the street saying that they are not feeling it is real. Their purchasing power has weakened. The fixed wage earners has not changed. They will continue their own livelihood on a daily basis.
Sir, but when will this hardship peak? In particular, when will inflation peak, and when will people start to feel a reprieve and start to feel the benefits of the growth?
I believe early next year, when things settle, more dollars are coming in before Christmas. There is a lot of supply coming in during the period. So I think for the rest of the year, we can expect that there will not be much movement in the inflation aspect. But come next year, January, I think that will be the revenge of the economy that we can expect. The foreign exchange, the currency movement, I think will show itself again. Inflation will pick up. The prices of oil, especially now that the cold weather is setting in Europe and in the US, there will be more demand for energy, and therefore the prices for energy will peak also. So I'm hoping against hope that this will not happen, but we have to be prepared.
Sir, is the government on the right track given a lot of exogenous factors here?
I think we need to hear more about what the government is doing to prepare for these external shocks that might be coming in the near future. We need to hear about what will be done, or how much do we have in order to cushion the impact of global recession. It happens. Do we have any money for that? The 5.3 trillion peso budget, I'm not sure will have much for to buffer the global recession that many people are expecting to happen.
Okay, so more nuanced usage of the funds here on how exactly we're going to be cushioning, like you mentioned, the blow. Thank you so much for those insights, Emmanuel Leyco, President of the Pamantasan ng Lungsod ng Maynila. Thank you, sir.
Thank you very much.
Pausing for a quick break, coming right up. President Bongbong Marcos holds bilateral meetings with fellow Southeast leaders at the ongoing ASEAN Summit in Phnom Penh, Cambodia. More of that and other stories when Business World Live returns. Stay with us. You're still watching Business World Live here on One News. I'm Danie, Laurel. Spanish multinational Elecnor is looking into solar and offshore wind development projects in the Philippines. Elecnor's managing director and head of business development for Southeast Asia, Ivan Garcia Varas, told Businessworld that the company is aware of the Philippines' push for renewables by 2030. With this, Garcia Varas says Elecnor is now in discussions with Philippine companies for possible partnerships. He adds that Elecnor is also planning to have its subsidiary, Elecnor Philippines, accredited to participate in power transmission projects. President Bongbong Marcos tended to a jam-packed schedule by attending a series of meetings on the first day of the ASEAN Summit in Cambodia on Thursday, November 10th. Now, on the sidelines of the summit, the president was able to meet with the King of Cambodia. The two discussed a possible tie-up on elderly medical care that would provide job opportunities for Filipino nurses. The president also met with Cambodian business leaders to invite them to invest in the Philippines. However, the president's hopes of discussing the issue of the South China Sea with Chinese President Xi Jinping was not realized. This, as the Foreign Affairs Department said, the Chinese leader would not be joining the ASEAN Summit. Despite this, the president was able to set a bilateral meeting with Vietnamese Prime Minister Pham Minh Chinh. However, according to Foreign Affairs Assistant Secretary Nathaniel Imperial, the president was unable to bring up the issue of the Code of Conduct on the disputed waters.
There was no specific discussion of the Code of Conduct, but they both agreed that we should have closer bilateral relations. The closer bilateral relations is a prerequisite for addressing these regional and bilateral issues.
The cryptocurrency industry is holding its breath as crypto exchange FTX may be looking at the possibility of filing for bankruptcy. This after rival Binance ditched initial plans of its buyout. Will FTX be able to get out of this $8 billion hole? More on that from Katie Greerfield in this Bloomberg report.
The crypto industry is having an existential moment. It started over the weekend when Binance CEO CZ, as he's known, took to Twitter to throw shade on the finances of rival exchange FTX. That led to massive withdrawals at FTX and a liquidity crunch that the exchange just couldn't deal with. Binance was actually going to buy FTX to solve that problem, and at the time, FTX CEO Sam Bankman-Fried tweeted that all assets will be covered one-to-one. That is one of the main reasons that we've asked Binance to come in. But then Binance took a look at FTX's books and backed out, leaving FTX really in the same financial hole. There's also the issue of why FTX had a liquidity issue in the first place. What happened to the customer funds? Did FTX mishandle them somehow? Bloomberg News reporting shows that U.S. regulators are looking into exactly that question. In any case, with Binance out, that means there's no one to rescue FTX here. That has profound implications for the entire crypto industry. But if we stay focused on FTX, there's two potential outcomes at this point. Either someone steps up with $4 billion to plug FTX's financial hole, or FTX is forced to file for bankruptcy. Popular opinion right now says that the latter is more likely, but it's a moving target.
Light Rail Manila Corporation, the private operator of LRT1, is hopeful that the arbitration case it filed against the Transportation Department and the Light Rail Transit Authority will be resolved soon. Now, under the arbitration case, LRMC hopes to recover around 2.7 billion pesos in compensation claims and costs resulting from delays in the implementation of fare adjustments from 2016, 2018, and 2020. LRMC tells Businessworld that a resolution to the case is crucial, especially if the government intends to offer its railways for public-private partnerships. LRMC had earlier reported that it incurred a core net loss of 494 million pesos for the January to September period due to the start of amortization of concession assets and borrowing costs. It's beginning to look a lot like Christmas in Makati as the Ayala Triangle Gardens delights the public with its Festival of Lights. Up to 6 million LED lights were used to light up the gardens for the Festival of Lights this holiday season. Ayala also turned this year's Lights and Sound show into a 360 immersive experience. The show includes a video presentation featuring Santa and his elves working at their Christmas lights factory to bring back the festival after 2 years in lockdown.
The community has been locked up in their homes for the last 2 years. So as we bring them out, we wanted to welcome them with a grander Festival of Lights. Yung pandemic has taught you to cherish that small, alam mo yan, small feats, di ba? Dati nakamask, ngayon hindi na nakamask. Kumbaga sa mababaw yung kaligayahan natin ngayon pagdating sa Pasko dahil na naghirap tayo ng 2 taon. Kaya anything that is small is big.
And those are the biggest stories on the economic and corporate front today. I'm Danie, Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local bourse when Businessworld Live returns. Stay with us. still watching Businessworld Live here on One News. Now, yesterday, as we all focused on that GDP print, the U.S. rallied, at least the stocks there, on the back of slower than projected inflation over there. So they saw 7.7% year-on-year inflation. That was the lowest since January, and that spurred bets that the Fed might moderate its rate hikes. And Asia did rally on the back of that. You can see all around the board here, from the S&P 500 up by 5.5% yesterday to the Nasdaq up by 7 0.4%. But just keep in mind here that the S&P 500 is still down 17% this year. The Nasdaq is still down nearly 30%. Now, how is our bourse opening this day after the GDP print? We had quite a little bit of a reaction yesterday, but it seems like that is spilling over into today. We're up by 0.7%, firming above 6,300 levels here. There were a lot of fears that we would not end in the 6,000 level by the end of the year, but hopefully we'll manage to keep this momentum going. Let's take a quick peek at which stocks are leading the charge, at least this Friday morning, our last trading day. You've got GD Capital with a hefty 5 3/10% gain. A couple of big guns in the property space, Ayala Land and SM Prime as well leading the charge. It's actually just one that is negative here, and that is Wilcon Depot, down by 1 3/10%. Also want to check in on the peso, whether it has reacted. Quite a strengthening. We haven't seen 57 levels in quite a while. So trading at 57.415 amid that higher than expected third quarter GDP print. Now we still have the last trickle of the earnings. This did come ahead of that GDP print, but I did want to check in on that stock today. That's JFC, up by still 2 6/10%. That comes after a couple of days of a surge already, after they had reported their third quarter system-wide sales grew to more than 51% to a record 77.8 billion pesos. They, even as they said, they're terminating Dunkin' Donuts franchising in China, Macau, and Hong Kong. Nevertheless, still quite some foot traffic in the malls here, and that was as well mentioned by NEDA Secretary Balisacan. A lot of revenge spending here, so people still eating in Jollibee. Now, what about Montanisan? This has gone the other way, even as it's recovering this morning. Their core net income for the third quarter was down 46% to just over 1.55 billion pesos. Now, recall that they had a product recall that, of course, in some countries in Europe banned its products. Mr. Teo did mention that volume that was recalled was small, but what made a big impact was the public confidence. In July, they reported a 15% decline in their sales, especially when it came to the noodles. And finally, I just wanted to take a quick peek at JG Summit, which of course also owns Cebu Pacific here. This, as it is trading at 3% up to 44 pesos and 90 centavos after they reported a net loss of 859 million pesos in the 9 months of the year. What they did mention, however, is that this was attributed largely to the forex issues. They have quite some dollar-denominated loans. But even as Cebu Pacific is recovering, they still posted a net loss in the third quarter that was 2.55 billion pesos. But comparing that to last year, the losses then were 8.20 billion pesos. Still quite a recovery. They did mention strong demand in the third quarter for flights. Flights were up by 318% year-on-year for Cebu Pacific. And that's it for today, November 11th, 2022. Join us again Monday next week. That's exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now. That's at www.signalplay.com. Stream One News live anytime, anywhere. I'm Danie, Laurel. Stay safe, Philippines. We are One News, all sides, all the time.